Welcome back to Yahoo Finance Live. We want to talk a little bit about the recovery we've been seeing in the bond market after yields had plunged to record lows amid this pandemic. To help us do that, we've got Guy Benstead. He is portfolio manager at Shelton Capital Management. Guy, good to see you, and thanks for being with us.
Good morning,
I
Alexis.
note, and you said the bond market has been looking through the looking glass in Alice in Wonderland. Things aren't as they seem. What do you mean by that?
Well, I think that the Alice in Wonderland analogy is more appropriate, that things just don't make sense. And throughout most of March, there were market responses to things that, as Alice was wandering through Wonderland, she was trying to make sense of it all, and there just was no making sense of it. So I think it was important just to surrender to the information that was coming, knowing that at every turn things were going to change, and it was important to just stay on track and wait for the markets to kind of come out on the other side. And I think we're starting to see that now.
And Guy, what do you make? I think the general thesis is that corporate America is about to undergo some pretty sizable restructurings. How would that impact the bond market?
Well, they're going to be very credit specific. I think that what we're seeing in the fundamentals is clearly a challenging market for any corporate entity. We've been running our analysis on the sectors that we follow. There's going to be revenue shortfalls, and there's going to be some companies in certain sectors that frankly are going to have to restructure their businesses entirely, almost from the ground up. And there's going to be companies that are prepared for that, both from a management perspective and a capital adequacy perspective, and there's some that aren't. And I think it's going to be real challenging.
And for those companies impacted by the coronavirus, I look at department stores, let's say a Macys and Nordstrom. What type of interest rates could they be expected to pay? And then secondarily, are companies impacted, even restaurants, could they be shut out of the bond market?
Well, all of the different businesses are different, right? There's retailers and there's retailers, and there's restaurant companies and other restaurant companies. I think what's challenging is that the small operators, the small businesses, the local restaurants, the small chains are going to have some trouble. But we have federal programs now, part of the CARES Act and part of the Federal Reserve programs are targeted for those Main Street type of enterprises with 10,000 or fewer employees. So it's a good thing to see the government stepping in and helping out these groups. Large companies, Nordstrom has access to the bond market. And so I think large companies with tried and true managements that people believe are going to make it through to the other side of this, so somewhat of a man-made crisis, be it as it may, I think they'll have access to the markets. They're going to pay a premium for that, and it's going to vary from company to company.
Guy, talk to us a little bit about what the Federal Reserve has been doing, because, it's unprecedented. We know they've touched just about every corner of the bond market, including now going to be buying up municipal bonds and corporate bonds, things they've never done before. How is that going to reshape the bond market going forward when we come out the other side of this pandemic?
Yeah, it's going to be a real balancing act with the Fed. I like to think of the Fed as the fire department. When the house starts to burn down, they need to show up and put out the fire. And I think what they learned from 2007, 8, 9 was they were tardy in showing up to the fire, and it wasn't until Lehman failed that they came in with all of their resources. They've been much quicker to act this time. They've acted in a much larger fashion than they did the last time. But there is a moral hazard. The Fed is the liquidity provider of last resort, and they've come up with some very innovative programs that are, I think, designed well in terms of feeding the liquidity pump from the top, but not trying to be in a position where they're picking winners and losers.
And what about for investors who want to have a little more exposure to the bond market during these uncertain times? What do you see as an opportunity right now?
Yeah, well, I think there's definitely opportunity in the credit markets, and it depends on how aggressive an investor wants to be. There's a lot of opportunity in opportunistic sectors of the marketplace, some more distressed areas. There's also plenty of opportunity just in investment grade municipal bonds that are trading at 200 to 300% of treasuries. Those rates will likely normalize over time for a patient investor. I think that someone who is looking at the equity market but is not quite ready to commit that kind of risk can look at the corporate bond market. There's mutual funds and ETF opportunities for do-it-yourself investors as well. I think the important thing is that there's going to be winners and losers, and it's to try and align yourselves with managers that have a track record of choosing those.
Guy, very important point I think you just made, that these companies accessing the debt markets are going to pay a premium to do so. But what does that mean for the equity market going forward? The capital structures of corporate America are about to change, if they haven't already, in a very big way. The way I think about it, you could be looking at a couple of years of depressed earnings.
Well, you could. You're right. That's and that's still unknown, because the economy globally is still either shut down or just some coming back online in some parts of the world. We don't know how long the U.S. economy is going to be in this slow or shelter-in-place mode. And until we reopen and find out what it's going to look like, the earnings profiles of companies, and again, it's going to vary from sector to sector, is going to be very uncertain. So the capital structures are going to matter. I think that the cost of capital, the market's going to determine that. And we had a tremendous cheapening of credit almost a month ago now in mid-March, which was some great buying opportunities at the time. And we saw a lot of high-quality companies come to market at a concession, and the market's rewarded them. And people who bought those bonds have been rewarded also. So I think it's still too early to tell exactly how it's going to turn out. But you're right, it's not going to turn around in a week or two.
Guy Benstead, portfolio manager at Shelton Capital Management. Thanks a lot. Come back and join us, okay?
Thank you. Will do, Alexis.
All right.